All right, traders, welcome. Today is Friday morning, June 24th. Our U.S. stock market has opened, and my first trade on my $10,000 portfolio is live. All right, and it was Bitcoin. And then I have a second trade. You all know what that was if you're signed up at my website. If you're not signed up, go over there. You're going to get all the free trades that I put out and trade alerts for the next few foreseeable weeks/months until I can prove that this new trade strategy is successful. Okay, we have limited amount of time, so let's jump into our charts here today. And we will start with my first trade, which I made on Bitcoin. Why did I make this trade? Well, you can see here an inverse head and shoulders pattern. All right. And this is on the 4-hour. If I zoom in here to the 4-hour, I was pretty aggressive. I put in my trade, let's see, what was it? 21,137, I think was the price that triggered the buy order. And so I was pretty aggressive with this. As soon as we crossed or broke that neckline, I wanted to be in the trade. No telling how fast this thing will move on us. I have a target here of, if we zoom out to the daily, and I think this is a great target because we measure from the top of the head to the neckline. That's this black line. That takes us right to our wick down on the 12th of May. The wick down there, that price was, let's see, our low was 25,365. Therefore, my target on this particular trade is 25,000. All right, and that gives us a risk-reward ratio of approximate, just a little over 2.5. Okay, enough said about my first trade. Let's dive into these charts here. We'll look at the overall market condition. And then if we have time at the end, guys, I'm going to go through a few of my next trades, those tokens and coins that are of interest to me that I believe will pump along with this bounce. And I'm calling it a bounce because I am still a bear on Bitcoin. I do think we have further to travel down. But for now, I think we will bounce to 25,000. Bringing the altcoin market up with that bounce. All right, so what's making me think this? Well, there are a number of things, many positive signs. First of all, the dollar is still looking bullish here, so that's not necessarily great for the overall market conditions. However, I've said this all along. Our VIX, so I do think the dollar will continue up. Our VIX is the predominant indicator, and that is really what this market is going off. Take a look at what's going on here on the VIX. We'll jump into the 4-hour chart, and you can see it better. Do you see that, guys? M pattern right here. All right. So right now we have broken that resistance on the the M right now, and we are dropping. And I do think we're going to come down and hit our support here. That is good for the markets. All right, that's indicating the markets will have a bit of a pop, a bit of a bounce. So that's a big one that I'm going off of. And we'll cruise through these charts and kind of see the same positive signs on all the charts. Now this is silver. I'm going to zoom back out to the daily, see what we've got going on there. All right, so I saw something here before. Okay. This is not turning out to be a W pattern. All right. And that is actually probably good. I first mentioned I thought we were going to do this. That's actually probably good indicator for the markets, because what's happening is people place their resources into gold and silver in times of uncertainty for stable conditions. You can see now that people are pulling out of silver, and we should see the same thing on gold. And where are they placing that? They're placing it back into the markets. And same thing here, guys. All right. Although we still, broader picture, and we have to look at these broader pictures, this is a cup and handle pattern. All right. And this remains a cup and handle pattern. So that means that uncertainty is going to come back into the market if this plays out. We'll go up to this neckline. And if we break that neckline, we'll go through. Our final target here for gold is nearly $3,000. All right, but that's in the future. So right now we're playing the bounce. And you can see the bounce is taking place on all of our U.S. indexes. Okay, Dow is jumping up. Let's see, do we see anything here on the 4-hour? Nothing particularly interesting. SPY, same thing. All right, hit some support, jumping up. NASDAQ, same thing. There you see a W pattern. All right, so that's indicating, and we have broken the top, the middle of that W there, so we are headed further up. All right, that's a good indicator. NASDAQ most closely correlates with our crypto space. All right, so another indicator there, and I think the QQQ was pretty much the same. Yeah, we have a weird, wonky type of W pattern. And another good sign here, guys, is look at this. Oil is rolling over. All right, so one of the indicators that the economy or the charts are going to pop a little bit is if oil starts to roll over. It is starting to roll over, and when those oil prices go down, that all comes back into the market price as well. All right, I've been looking at this chart as well on the weekly. This is the NASDAQ 100 stocks above the 200-day moving average, and you can see we have reached an area of capitulation. Only time we got down to this level or below before was in 2008, housing market crisis. All right, should we start to have another housing market crisis, I would expect that to come back down to that level of support at 1% or less of the NASDAQ 100 stocks above the 200-day moving average. Okay, then we have here, this is the Euro-Dollars futures, and this I kind of use this as a forecast of what this chart kind of prices in future Fed movement. All right, and you can see this indicated here every time we go up here. That is when the Fed is doing their quantitative easing. All right, and when we go down, that is when the Fed is doing their tightening. All right, and this is predictive in nature because you can see here, okay, this is 2007. This chart had already priced in Fed quantitative easing before our 2008 real estate crash. All right, so very much ahead of schedule. And same thing over here. It's always ahead by about 4 or 5 months. So right now we're under this major trend line, which we have not broken to this degree previously. This down here is not relevant data because that's when the chart first started. All right, so but we have never broken this line to this degree. So my question is, when you have long candles like this, they tend to collapse on themselves. This is overextended in my opinion, and I said this in a previous video. I do think we're going to come back up and test that previous support before we head further down. This all correlates with the bounce that I am currently seeing. Total. Let's jump over here. All right. On our way down to final target there. I shouldn't laugh, but it's just unbelievable. And again, before we do, what did I see here on the 4-hour chart? Oh, yeah. Zooming in here, you can see we have the same pattern that I went off of on the Bitcoin chart, an inverse head and shoulders pattern. This neckline has not yet been broken. But keep an eye on that, guys, because once that does break, and if that does break, I should say first, you can get a good estimate of where we're going next by measuring as we do here. Whoops. Dang it. And then placing that measurement outside of our breakout, and that'll tell you, looks like the 200-day moving average. Well, 200 candle. This is the 4-hour chart. All right, so you can do this on many of the charts. I'm seeing these inverse head and shoulders patterns all over the place. Okay, what do I want to cover next? Bitcoin dominance. Might as well take a look there, see what's going on. I'm going to zoom out to the daily. Oh no, this is the CME futures. All right, Bitcoin dominance is over here. And doing as I expected, we came back down to the neckline. Now we're using that as support, guys. And it could be, it's hard to tell. There's no patterns that have formed here. This is a little bit of a bear flag. So we knew we were going to come down further, and that's what I said it would do. So we could do this, or maybe even come down and test that support. Bitcoin dominance is very much down at the moment. Okay. Oh, one more thing here. Let's look at Bitcoin longs. I've never seen us this extended on the Bitcoin longs chart here. Look at this, guys. There are a lot of longs in the market. All right. Could this collapse? Yeah, it could collapse before we go up. As shorts take out those longs, or those shorts get, or those longs, the stop outs get triggered, and then taking us down before we go up. It remains to be seen. We got to watch that. And I did want to show you one more thing on the Bitcoin chart here. Zooming in, let's go to a cleaner chart actually, so I can show you this. This is kind of interesting too. Zooming out to the daily. Ignore all the, I'm sorry, it's so noisy. But if we take this move here with the Luna crash down to our wick low, all right, which was about $14,000, and we move that over here, and this move down equals the same thing. I'm not big on fractals, but that is very interesting. $14,000 more. So further indicating we may have reached a temporary bottom. All right, I'm going to jump over to some of these coins that I promised to show you that are on my list for our next trade. And I'll show you why and what I'm seeing on some of these. Now, MCO2. That one, what is this print up here? I don't know if that's an anomaly or if that's actually... That's interesting. Somebody placed an order way up there and it got filled. Anyways, MCO2 is down on support. All right. And we have a trend line. You can see this. What you're looking for on a trade like this is a breakout to the top side of those trend lines. You can draw these on many, whatever coins you're interested in. You can find these sort of descending trend lines. And guys, don't forget, don't forget to look at your RSI down here. We're seeing lots of bullish divergence. All right, see that? See how the RSI is traveling up while the price is moving down. That is definitely hidden bullish divergence. You're seeing that on all the charts. And you can draw these descending wedges as well, which is also bullish. But you're looking for on a 4-hour to break above that. And you can draw these out on your own charts and see these kind of patterns. And there's another pattern as well that I'm seeing. Let's see if we find it on one of my charts. There's a good descending wedge on STX. So looking to break to the top side of that, and that might be an entry for me. By the way, guys, on my public facing portfolio, I am only trading USDC or BTC pair at the moment. Maybe I'll get into USDT later. Right now, I just don't feel comfortable trading USDT, and I think the market agrees with me. All right, see that hidden bullish divergence there on STX? All right, Doji. Look at this. Doji's got a long trending descending wedge. That would take us way up from here, way up. All right, UMA, kind of a double bottom. Oh, that's the other pattern. Yes. It's not on LTC. The other pattern I'm seeing is a W pattern, and we have broken that resistance to the upside. I don't see anything there. Ape has reached its target down. Remember, guys, I was doubting the charts once again. I promise I'm not going to be doing that in this new trading strategy. I'm just going to look at the charts, set my emotions aside, not doubt head and shoulders patterns. I mean, I might say it out loud, but this chart right here showed me a long time ago when ApeCoin, and you guys had a hard time believing it as well, when ApeCoin was up around $15, that we were coming down to $4. And that's an incredible move. We have now reached the target down. Expect a bounce here on this. Okay, I'm trying to find one of those W patterns that has broken to the upside. There you see the start of a formation of a W pattern. But anyways, it is W patterns and descending wedges, guys. Okay, Suku is not, really shouldn't be in this list. It broke to the upside of this descending wedge, has not yet come down to touch the top side, so I still expect further movement down on Suku. I might remove that one from my list here. Solana, let's see what's going on here. Inside of a descending wedge and moving to the top side of this wedge, guys. Not only is it moving to the top side, but it could break out to the top side. So depending upon your aggressiveness and your risk tolerance, you may want to trade this one to the top side. A lot of times what happens though, guys, with these descending wedges, I mentioned this before, is we tend to travel straight across, all right, before we break out to the top side. So you could wait a little bit on this. Okay. I guess I should have looked this up before, but okay. Another one with hidden bullish divergence on GMT. Maybe I'm seeing these W patterns more on the 4-hour. I'm not quite sure here, guys. I thought I had a W pattern. Okay, well, here's Jasmine is a good example. Not only do we have this descending trend line on the 4-hour chart, but there is a bit of a W pattern here. Let me draw it out for you so you can see. All right. And we have broken to the top side of that. That resistance was right there. We've broken to the top side of that resistance as well as the descending trend line. Come back down. We have kissed that. So this is a safe area for entry if you are so inclined on Jasmine. All right. So there's my example. All right. Anyways, guys, we are live on the $10,000 portfolio challenge. My goal is after 5 years to add, I would love to add 2 zeros to it. I don't know if it's possible. Bear markets are extremely hard to trade in, and I might as well jump to the conclusion here and read what I've got as an outro. So guys, bear markets are where us traders are really tested. I mean, it's one thing in a bull market to throw a dart at the board. Everybody wins. We all look smart, including myself. So how can we trade in a bear market? Only the best will pull through with success. So this venture puts me squarely in the position of vulnerability, for sure, for sure, for sure. And I could succeed or I could fail miserably. And you all get to watch and either applaud or laugh, pending how I do. One thing I do know is that I have decided to place my emotions to the side, not doubt the charts any longer, and depend solely on what the charts are actually telling me. All right, they tell me the pure truth of what's about to take place. I've always said you can often read the news in the charts before it happens. No more contrarian. All right, this no more cowboy. This chart shows us the pure form of price action probability. I won't be putting in trades without stops any longer, and this sometimes is going to suck because we'll get stopped out, and then the price will take off on us. That happens. So it's all about adjusting your stops according to your risk tolerance. I'm going to try to be a bit safe. I'm going to look for those levels where I think it's tolerant and we can make it happen. And we'll all do better because of it. The goal is base hits, not home runs any longer. And I think we can even do better in the end. All right. Peace to you all and best of luck on all of your trades. Talk to you in the next video.